Good morning, everybody. We're just going to give everybody a few moments to join, and then we'll be starting our presentation. Thank you. Good morning, everyone. We're just going to give another moment or two for a few more people to join, and then we'll begin our presentation. Well, good morning. My name is Susan Reed from Sachs LLP, and I'd like to welcome you to this morning's presentation, the reporting requirements for the HHS Provider Relief Fund. We're excited we actually have details that we're able to provide you this morning. Before we begin, just to let you know, we are going to be recording this webinar. We're going to email all participants a link to the presentation in case you miss anything, or if you want to send it to your colleagues. Our presenters are also going to take your questions at the end of the presentation. So please utilize the chat box and send us any questions you might have. In case we do run out of time, we will respond to your emails or questions. We're also have a ton of information in our handout sections, and our presenters are going to review those as we go through the presentation. Now let me introduce you to our esteemed presenters. First up is Debbie Nappy, a leader of the healthcare team at Sachs. She heads our firm's Provider Relief Task Force and has dedicated the last year to keeping up with the ever-changing reporting requirements. Next up, we'll have Adam Holtzberg, who's a senior audit manager and member of the healthcare team at Sachs. He's going to provide insights on both the lost revenue calculations and audit requirements. Our agenda this morning includes an overview of the reporting portal registration process, a review of the reporting due dates, an overview of expenses attributable to COVID-19, a review of the calculation of lost patient care revenues, including changes to the original calculation, which is based on quarterly reporting. We're going to provide you with a link to the data worksheet tool provided by HHS. We're going to review the important interactions with other stimulus programs. And lastly, discuss the audit requirements for-profit and nonprofit organizations. So let me turn this over to Debbie Nappy now to get us updated on the reporting requirements.
Good morning. Thank you so much for sharing this Friday morning with us. There is so much to cover today. We're very excited to finally be able to put this all together. We've been presenting on this now for a few times, and we finally have answers to the questions so that we're able to provide those to you. Here, I'm not going to spend a lot of time because we have so much to get through. And like Susan had just said, please, any questions that you have for information that was not answered directly, please reach out to us. We will respond to you quickly. So basically, last April, payments were deposited, targeted payments were deposited into your practice checking account for COVID, as well as you were allowed then to go and apply for additional distributions. And now the time has come whereby we are now due to report on these funds, with the first deadline being September 30th, 2021. When you receive these funds, there was terms and conditions as to how you would utilize the use of them. and that took place right on the onset. And then we had on January 15th, whereby the portal opened, and it was for the registration process only. And now, as of July 1st, the reporting portal is now open to begin with reporting. And as I have said in the past, the funds that were received were used to prevent, prepare, and respond to the coronavirus. So I'm not going to spend a lot of time on this, but all I can say is that if you have not done so already, these slides are presented for you so that as soon as you're done today, you can go and register, because you are not going to be able to go on and provide the information that's required if you have not yet started your registration process. So once again, this is just telling you what's going to be needed. You could go to the next slide. You're going to have to be on a current version of an internet connection, or you're not going to be able to continue. The entire process will take you 20 minutes, and you have to do it in one sitting. And this is the information that is going to be required in order for you to register. Once you have registered, this is just showing you what it looks like, even for the reporting process. This is what the screenshot of what it looks like to go onto their website. And then when it's all done, in addition, you're also going to have to know a confirmation of the dollars that you have received. So this will be part of the registration. And then when it's all completed, you are going to get an email stating that you have registered successfully. And this is what you will be receiving. So now we're going to get to the reporting process, and we've been waiting for this. So this is, if you've been on to the HHS website since this came out at the beginning of July, they have now broken down the reporting period into quarters. So if you look at this chart, for most of you who received a payment on April 4th, thereabout, between April 10th and June 30th, you had, right, it passed until June 30th of 2021 to spend down any dollars that you still had available. But now the time has come for the reporting. So the portal opened July 1st, 2021, and you have until September 30th of 2021 to report on this period. Keep in mind, there are no extensions. This is your hard deadline. And if you do not comply with this deadline, they have it stated on their website and their FAQs that you are going to be considered not compliant, and as a result, they can recoup these funds. So with that being said, if you could go back, there were many of you who didn't receive just one payment. You also received numerous payments. So now, whereas before we thought we only had one reporting period, if those dollar amounts are in excess of $10,000, you then will have separate reporting periods based on when you received your funds. And the date of the fund is considered received either when it cleared through an ACH or when you cashed your check that you received. In addition, I also want to clarify something. So period of availability. If you look in period 2, if you received any dollars between July 1st of 2020 to December 31st of 2020, you now have until December 31st of this year to continue in your calculation of lost revenue, or to then expend the dollars on COVID-related expenses. So they also did this. They provided these multiple reporting periods to still give you this period of availability to comply and retain these dollars. So I guess what I would stress all along is, please consult with your advisor, please sit down, please pay careful attention to this, because for those of you who receive dollars throughout the year, you still have time to plan for these dollars. If you have not spent on COVID-related expenses, or your calculation of lost revenue is not going to enable you to retain all of these dollars, they've now put together a time period for when these dollars need to be returned. So for the first reporting period of September 30th, 2021, if you find that you still have excess HHS funds that need to be refunded, you now will have a month after the reporting deadline. And in their FAQs, there's about 3 or 4 that actually deal with how to return the funds, the process. And one other thing before we move to the next slide, if you receive dollars in the first reporting period that were less than $10,000 for the period of April through June, you are not required to report in that period. If you received 2 smaller payments in that period that exceed the 10, that's when you then have a reporting requirement. So then again, our reporting requirements, right? We first start with COVID-related expenses, then we go to our patient lost revenue. And in our patient lost revenue that Adam is going to cover later, they give you 3 methodologies that you are able to report on. And Adam's going to share the good news as to how they change the calculation, and this will make it more beneficial for your practices. So now I want to give you an overview of the portal. We did our best to provide screenshots. Not as easy maybe to see them, but there are so many tutorials on the HHS website, as well as a step-by-step process. So please visit their website, because there's a lot of tools on there that can assist you. So when you first go in, the first thing that you have to confirm is the information regarding your entity, right? So you're going to see your EIN, the name. There are some items in these text boxes that you can add additional information, and there's others that you cannot make any changes. And as you can see, there's also a under reporting, as you complete each section, that little yellow blue circle will then change to a check mark. And another thing to consider is that, or not consider, that you need to do is you need to save continuously along the way, because while you're completing this, you cannot go to the next step until you complete the information for the screen that you are currently on. So just make sure that you are saving along the way. You are able to come in and out of this portal, but you are not able to skip any section and come back to it later. Now, depending on how you answer this question will determine how many more questions are going to be asked. If you receive dollars on behalf of a subsidiary and you are going to report on that subsidiary, if you answer yes to this drop-down box, then it's going to also ask you for the employer identification number for your subsidiary. So please, any questions on this, reach out and we can assist you with that. But just keep in mind that depending on how you answer this question will then determine how much more information you are required to provide. In addition, another question, they want to know during the year, did you acquire or divest of any of your subsidiaries? So once again, depending on the drop-down box on what you answer will then determine how many more or how much additional information you need to provide. And once again, the HHS webinar or video that's provided on their website really gives you some really good information on this, as well as their pamphlet. Now we're going to get to the one screen that this information is very important. They're going to present a pre-populated amount of what has been received by your practice from the HHS. So now, as you can see, we're in the first quarter, April 10, 2020 to June 30th. And also keep in mind, you cannot go in and early report for other quarters. You can't report it all at one time. It has to be based on this quarter that's currently open with the September 30th due date. Oh, and one other item, which we don't have a slide. So when you verify your payments and you see that your payments are not reflected properly, let's say there's an error either in the targeted distribution, that was the first distribution you received based on 2% of Medicare, or maybe then if you were a dental practice or mental health, you applied for some dollars in the second round. If you see that the dollars that they have attributed to your practice is incorrect, you will not be allowed to go on in this reporting process until you call their hotline, and you have to then resolve the disputed amount with a person at the HHS. Now on the screen, it'll allow you to state that the amount is incorrect, and there is a website that will come up and it'll send that information to the website, but the instructions are very specific that you cannot resolve it unless you call and speak to a person. So I would encourage everyone on this call, or even other advisors who are helping their client, to please at least go on and make it to this part in the reporting to then verify that your payments are correct, because otherwise, if we wait too long, you might not have enough time to complete all that you need to do for this process. So this screen, wait, if you could go back, sorry, go back. So this screen here is also very important. If you held your funds in an interest-bearing account, you now have to report on the interest that was earned up until the time that the funds were expended for the first quarter. So if you put the money, if you received the money last May and you have it in an interest-bearing account and the period of reporting ended June 30th, 2021, you have to now look at your brokerage statement, bank statement, wherever this money is being held, and you have to account for the interest that was earned. And that interest is also going to add to the amount that you received for the provider relief funds. And your total for COVID-related expenses and lost revenue is going to be the payment you received plus this interest calculation. In addition, on this screen, you have to also show what type of entity are you in this drop-down box. Are you an S Corp? Are you a C Corp? Are you a not-for-profit? So there are also going to be questions about your entity type that need to be answered. And it's not showing on here, but another question on this screen is, are you required for a single audit if you received $750,000 or more of provider relief funds? So just bear in mind that these questions have to be answered before you can move on. And as I had said earlier, so here's going to be the summary that you have to confirm of the payments received, right? So for anyone on the call who received money for the nursing home infection control, that's listed separately because it's reported on separately, right? You have your other provider relief payments. Those are payments that from the general funds. Here's going to be this interest that you just stated that you earned. And in total, here are all the provider relief payments that you received, as well as if you returned any payments, which that should then populate automatically. So when you look at this, you need to confirm it. And if there's an issue, then you have to reach out to their recommended hotline number to go through it. And as they state here, they recommend that you print out this page for your records. And in addition, as you go through each screen, they've really done a good job. You have, see, there's resources and FAQs. They have the FAQs embedded in the screen that relate to these questions. There's, like I said, there are so many resources, I can't say it enough, available to you that while you're going through each screen, they're providing the information, as well as you can also go and they have a YouTube video screen by screen. This is what I was speaking to earlier, whereby in example 1, you received a payment on April 29th, you received a payment on June 2nd. In total, you have $58,000, so you are required to report on these dollars. If you look at the example in example 2, and it's funny, I'm just looking at this, they have a typo. This came from the HHS. Your April 29th payment is only $3,200. Your second payment didn't come until July. Therefore, you have no reporting requirement for the first period. You're only going to have to start reporting on the second payment that you received. So just keep that in mind. And in addition, we've said it time and time again, you have to maintain these records for support for 3 years after the date of submission of your report. And unlike the PPP loan, no documentation is going to be required for your expenses. I think Adam's going to cover it. I think possibly you have to provide documentation if you utilize the other method that's available to you for lost revenue, but on the expense side, they're not going to require that you upload any documentation. So it's really up to you to make sure that you're maintaining all of this information. Here we go again, something new, which we covered already, is this period of availability. So for the first reporting period, they've actually said that you can go back to January 1, 2020 through June 30th, 2021 to look at your COVID-related expenses, but you can't go back any further before that because they recognize that COVID, started in early 2020. We've talked about this numerous times. We've gone over, you cannot double dip. If you received dollars and provision from other programs, that has to be netted against those expenses. And you're going to see, we'll go to the next slide, right? So our PPP funds, if you received any dollars under FEMA, if you received CARES Act testing dollars, if you received any reimbursement from your, even an insurance policy for any of your lost revenue, if you were allowed, any reimbursement from your commercial insurance for any type of supplies, all of that has to be netted before you can start considering your expenses, COVID-related expenses for the Provider Relief Fund. And I just want to highlight this for you. So you're actually going to have a screen whereby you have to put in these dollars. So if you receive PPP1, PPP2, and like I said, when you look at the Excel workbook, I recommend that you complete that workbook prior to going online and starting this process, but you need to report all of that. So if you received money under the Bergen CARES Act, any reimbursement for rent, whatever, the New Jersey EDA, whatever you received, all of those dollars have to be charted here for them to see what you received throughout the year. And here's a little bit of a larger screen so that you can see it, and keep in mind, everything is reported quarterly. So you have to report all these dollars in the quarter. The only pre-populated screen or dollar amount on this input is the first one, the COVID testing funds. That's automatically going to be in the portal when you start going through this process. Here again, I'm just reiterating what qualifies as an expense for COVID, right? We've gone through this numerous times, so it's just there for your information. We could continue. Okay, so now we're going to start with other provider relief expenses, right? So now you have to report on your expenses for this first period. Now keep in mind, nursing home infection control payments, that's going to be reported separate from other provider relief payment expenses. And then we have our unreimbursed expenses attributed to coronavirus. So as we go further along, I just want to be able to then, you could go to the next screen. So we had covered this numerous times, but now you're going to see it come to light in the portal. If you received between $10,000 to under $500,000, you only have to report on the summary of your G&A expenses and other healthcare related expenses. So the next screen is going to show you what it's going to look like when you're entering this information. So keep in mind, this is between these two dollar amounts. So here you have your G&A and your healthcare related expenses, and that's why we need to utilize their workbook or whatever you're putting together with your advisor, because you're only going to be entering the summary of your COVID related expenses in these screens for the quarter that you're reporting on. And here's just, I don't have time, but here's just the summary. And keep in mind with this as well, that when it refers to mortgage, it's if you had to go out and obtain additional space because of COVID-related situations. And also keep in mind that you may have already utilized some of these expenses for your PPP loan forgiveness application. So that's something also to consider when you're reviewing this as well. Here's our healthcare related expenses, right? Our supplies, any equipment, IT, telehealth, our facilities. Now, if you're in excess of 500,000, it's still the same expenses. It's not that the expenses are any different. It's just that the reporting on these expenses is in more detail. And for time, we're just going to go through the, pass through this. Same thing, all of your healthcare related expenses. And then this is the screen. So keep in mind, in excess of $500,000, you now have to give a breakdown, right, depending on the quarter that you're reporting on, of these related expenses in detail, as opposed to if you were under $500,000, it's the same expenses, but you're just providing it in a summary format. This is for your information. I've spoken on this previously, but just some of the expenses then can qualify for the provider relief fund. Right, capital equipment, facilities, some additional items that you could consider, right, for your payroll, hiring, bonuses, retention payments, and also in the FAQs, they've added that for 2020, it's $197,200 is the maximum amount per person that you can have for executive pay. And for 2021, the amount has gone up to, I believe, $199,000. It's a little bit for inflation when looking at these dollars. In addition to healthcare related expenses and lost revenue, you also in the portal, and you're going to see the screenshot. You also have to report on non-reporting information. So, well, if you could go to the next slide. You're going to now have to report on personnel, patient information, and facilities. So once again, here's all the FAQs, because in the FAQs, it's going to determine for you who's a full-time employee, who's a part-time employee, do you have furloughed employees. So you have to provide all of that information. It's required. It's not it's not something you can skip. So you're going to have to report all of that on a quarterly basis, irregardless of how much money you received from these funds. So sorry to go through it so quickly, but please email me with any questions. We just have a lot to get through. We're here to help you. Like I said, the HHS has so much information, so many webinars that once you subscribe, you can listen to them over and over, and just hope you were able to glean some information from this morning. Okay, and now I'd like to hand it over to Adam.
Thanks, Debbie, and good morning, everyone. So I'm going to be starting off talking about lost revenue calculation. So just go over a quick recap on where things were with this. So providers have 3 options to calculate lost revenue related to COVID-19. So option 1 is the difference between your 2019 and 2020 actual patient care revenue. Option 2, if you have a budget that was approved prior to March 27th, 2020, you could then take look at your budget 2020 versus your actual 2020 patient care revenue. And then the third option is kind of a choose your own method. However, with this option, if you do go this route, you will more than likely be audited by HRSA. So what that means is if HRSA comes in and deems the method you've chosen not to be reasonable, they will then require you to resubmit the report within 30 days using one of the other 2 options. And I just want to point out, so while option 3 is definitely a riskier choice, option 2, on the other hand, is really only available for any 12/31 year ends. So if you're a fiscal year end, for instance, like a 6/30 year end, you're going to be limited really to option 1 or option 3. So in that case, where maybe option 1 isn't too beneficial for you, you may want to try for option 3 and see what happens in that case. Let's just give some more information on option 3. You will have to provide additional documentation. You will have to provide a narrative document describing the methodology. So you will have to explain why the methodology is reasonable for the circumstances, and also a description establishing how the lost revenue was related to the coronavirus. You would also have to provide your calculation of the lost revenue using your methodology. So HHS has some best practices if you do choose option 3. I won't go over all of them, but the main idea to take away is to be consistent on how you apply your methodology across the board. And also, sorry, go back. HHS really hasn't come out explaining, what is considered a reasonable method. The only really information we have is they came out with one example. So in their example, the provider had 11 service lines in 2019. There was a 12th service line added in 2020. So in choosing option 3, what they did was they dropped the 12th service line and compared the revenue between 11 service lines from 2019 and 2020. So that's an example of what HHS considers to be reasonable, but they don't really have any more information on what they would consider. So now what's new with lost revenue calculation? So based on the updated FAQs, providers are to determine their lost revenue on a quarterly basis and not an annual basis, which is a big change, and it's a big benefit to providers. Lost revenues are calculated for each quarter during the period of availability. Debbie kind of went over this already, but the period of availability is the period of when the funds must be used by. And that's based on when the funds were received, because different periods have different periods of availability. Also important is that you're only looking at the applicable quarters. So by applicable quarters, that means only the quarters where you had lost revenue. If you had quarters where you didn't have lost revenue, those can be disregarded. So that's another big benefit to providers. And then when you're reporting, so not only on a quarterly basis, you also have to be reporting based on the type of revenue. And those types are Medicare A and B, Medicare C, Medicaid, commercial insurance, self-pay, and other. And just a reminder, this is all based on the patient care revenues. So any revenues generated from non-patient care sources are not permitted. HHS has a list, which we have here. Now there are some exceptions. For instance, prescription sales revenue is not permitted. However, if it's derived from the 340B program, that would be permitted. And then the other thing I want to point out, so one of the items here is grants. So I know a lot of not-for-profits have received a lot of additional grant funding over the past year. So that additional funding won't play into the loss calculation. The grants would not be permitted as part of that. So that's something that helps. So here I just have a quick example on how the quarterly calculation will really work. So in this example, the provider has opted to use option 1 for the calculation. So that's the actual 2020 versus the actual 2019 revenues. And in this situation, the provider received $5 million in provider relief funds, and we're going to assume there was no expenditures for this example. So you can see in quarter 2, 3, and 4, there were declines in revenues. So there is lost revenue in those periods that add up to the 5 million. You can see in the other periods, for instance, quarter 1, the actual 2020 is greater than 2019. However, for that period, it would be considered 0 because that would be disregarded. And if this was under the old way, when it was annual basis, annual revenue versus instead of quarterly, in 2020, the annual revenue was 26 million. 2019 annual was 29 million. So if this was still going based on the annual method, the lost revenue will only be 3 million. So the quarterly change here really is a great benefit. And then one additional update to the lost revenue calculation. So for providers that have lost revenue greater than the amount of provider relief funds received in a payment receipt period, that excess lost revenue can be applied to future payment receipt periods. So for instance, you're doing reporting on period 1, you receive, for example, 2 million, but you deem there's lost revenue of 3 million, that additional excess 1 million lost revenue can be applied to future periods. So that's another way they're trying to help you make sure that you're using these funds and don't have to return them. Some additional items. Debbie kind of mentioned this first point earlier, but any you're able to, if you have any losses or expenses with the COVID-19 prior to receive payments, you're able to use those future provider relief funds against those old losses or old payments, as long as they occur by starting January 1st, 2020 and later. Just go back 1 second. So each of the different periods have a different deadline to use the funds. And this was a change from previously where it was all funds had to be used by June 30th, 2021. So now based on when you receive the funds, you now have a different deadline to use the funds. And that period of use to the deadline is that period of availability. So the next few slides is going to go over some screenshots from the reporting portal for lost revenue. So the first one is if you're using option 1, the actual versus actual 2019 versus 2020. So you can see here you'll be inputting the actual revenue by quarter and by type. And then the system will determine the lost revenue calculation for you in these situations. And then you can see there's different tabs for each of the different periods, 19, 20, and then 21. So the next one is showing you option 2. This is the budget to actual. And then, so remember with this option, you would have to submit your 2020 budget, and you will also need to provide a letter from the executives of your organization attesting to the fact that the budget was approved prior to March 27th, 2020. And then I just want to point out, so you can see on the tabs, you have 2020 budget, 2020 actuals, and then there's a tab for 2021 budgeted. So as of right now, there's no requirement to submit any 2021 budget. So I'm not sure if they're looking for anything additional, but that's currently a question out there on if we need to do anything additional, if we need to use a 2021 budgeted. And the last one is if you use option 3, which is the alternative method when you come up with your own methodology. So in this situation, it's a little different. The prior two options, you were inputting your revenues by quarter and by type. If you choose option 3, you would just input the lost revenue by quarter based on your methodology, and then you would need to submit the narrative and your calculation. And then if there's any other additional documentations you want to submit, you could do that as well. And this is just a summary slide. This comes straight from HHS that goes over the different options and how they kind of flow, but we could skip along. So now I'm going to be discussing the audit requirements. So just to give a quick recap, so for-profit providers who expend or use, and by use I mean under the lost revenue calculation, 750,000 or greater of the provider relief funds, you will need to undergo a audit. And then if you expend or use under that amount, there is no audit requirement for you. So this is only with a threshold of 750,000 or greater. So the two options is to have either a financial related audit of award or awards conducted in accordance with government auditing standards, or to undergo an audit under uniform guidance. So the first option is likely going to be the easier option. The only downside is we really don't have any information at this time on how that option is really going to work. HHS really hasn't provided any information as they were focused on getting the reporting portal up and running. On the other hand, we do know how the uniform guidance audit would run. There's compliance supplements that come out every year that detail how the audit will be performed. However, audits under uniform guidance are quite a bit of work. And I just want to mention one thing. So not-for-profit providers, you would have to include the provider relief funds as a federal grant on your CFA. And then that would then determine what kind of audit you may or may not need. So some changes that have come out. So HHS is now no longer requiring an audit for year-end 12/31/20. Previously, we were told that for 12/31/20, we would need to do audits. However, that is no longer the case. The update is using terminology for not-for-profits. However, it's going to be very unlikely. There's two different time frames for the two not-for-profits and for-profits, so it's very likely that it's the same exact time frame. And then just one other note, there was a compliance supplement that came out that touched on provider relief funds, and it mentions in that supplement that audits are required for 12/31/20. The language from the FAQs supersede that, so that could be disregarded. So one last item I want to touch on is when now the audits would be required. So as I mentioned before, for fiscal years 12/31/20 and then all the way running through June 29th, 21, there is no audit requirement. Starting with June 30th, 21 and then running through fiscal year 12/30/21, you will have to do an audit based on your period one funds. So the funds you receive from April 10th, 2020 to June 30th, 2020. And then for fiscal year 12/31/21 through fiscal year 6/29/22, you would do an audit based on the funds received during periods 1 and 2. And then for fiscal year 6/30/22 and later, there's no information out currently, but based on how it's been going so far, it looks like likely to be just periods 2 and 3 of that case. So how this kind of works is essentially they're waiting for the period of availability to be finished before requiring an audit. So for instance, period 1, that ends June 30th, 21. So you're able to use the funds up to that date, June 30th, 21. So that's why they're not requiring an audit until that date. They're essentially waiting for the entire period to be finished and then saying, okay, now you require an audit if you hit that threshold. And then that's why, period 1 and 2, period 2 runs through 12/31/21, and that's why starting with fiscal year 12/31/21, you would need to include period 2 in that audit as well. So now we're going to turn it over and see if there's any questions. Sue?
Yeah, terrific. Guys, great presentations, a lot of information. We want to reiterate that we are going to be sending an email to all participants. This is going to include the slides, the handouts that we're referencing, as well as a link to the presentation. That should come out sometime early next week. That will contain a tremendous amount of detail. We know we went through a lot of the information quickly. We had covered a lot of that content in earlier presentations, which you can also find on our website. But as Debbie mentioned, I think on our next slide, we include our presenters' email addresses, so you can request specific questions to them. But we did get a number of good questions in our chat box. So Debbie, I want to start with you. When we're looking at putting this information in the data sheet, are we going to be looking at this on a tax basis, which most practices file, or are we looking at this on an accrual basis?
Sue, thank you. I meant to cover that earlier. So initially in our few presentations prior to this one, we were waiting for clarification because the FAQs reference your accounting basis of accounting, right? And for some of us, we use cash basis for our tax returns, but accrual basis for our financial statements. So what they've now determined is they give you three options: cash, modified cash, or accrual. And modified cash is just when you're then being allowed to take a deduction for your pension accrual for the year. So basically what they've stated is, if you have financial statements that are being distributed or utilized for your financing throughout the year to outside sources, and those financial statements are on an accrual basis method of accounting, then for purposes of reporting for the provider relief funds, you then have to report on the accrual basis. I have one client whereby, or not one, many, if your financial statements are prepared on an income tax basis, which is the same as you're filing your tax return, then you get to utilize either the cash or the modified cash as your basis of accounting for the provider relief funds.
Terrific. Thank you very much. And Adam, we've got a couple questions as to what do we consider as revenue when we're doing our lost revenue calculations? There are questions both, do we count the provider relief funds, as well as do we count PPP funds in as revenue received in those periods where they receive those funds?
So you would only be looking at the actual patient care revenue. You'll be limiting just to services provided to patients that are being funded from Medicare, Medicaid, self-pay, things of that nature. So the provider relief funds, PPP funds would not be included as part of that lost revenue calculation.
Okay, terrific. And Debbie, you had gone through a number of expenses, and let's say we didn't really have a lot of out-of-pocket expenses for COVID. Are we allowed to report zero for our expenses?
So yeah, so the good news on that is, and actually the HHS also, like I said, in listening to a lot of their webinars numerous times, they have stated that you are allowed to report on lost revenue only for the calculation. However, you still have to go through all of those input screens and put zeros, right? You can't just leave them blank. So you can report the zero and then just go right to the lost revenue calculation. Now keep in mind, you're going to have your billing department, if you utilize an outside billing consultant, you're going to have someone run those reports, because especially on the cash basis, right, you're going to have to tie those quarterly totals. And if you have numerous payments that you received from the provider relief funds, you're going to have to tie those quarterly payments, patient payments received, to then your accounting software. So once again, this is something that you really need to start planning for if you haven't already. Utilize the spreadsheet. The Excel spreadsheet is attached, and when you look at it, it actually has tabs, and it's either your lost revenue, option 1, option 2, option 3, and start accumulating that information. Because even now, right, great news that now any quarter that has income is going to be reflected as a zero. So you're actually going to get the benefit of the lost quarters. But now we just have to go through and put together all the details of the payments, patient payments, commercial payments that you received during that quarter in order to comply.
And just as a follow-up, Debbie, Adam was explaining, what we don't include in revenue. So we do have to report, though, on the receipt of the PPP funds. Is that correct?
Yes, we do. So that was back in the slide I don't remember if it was input screen number 5 or 6, whereby then you're reporting all the dollars you received from all the various programs. So that's informational. It doesn't get included in any calculation, but they are looking to see what did you receive under the CARES Act, all the programs that were out there.
Great, thanks for that clarification. And Adam, we have a question. If you have under 750,000, if you received under 750,000 for provider relief funds, is there any audit requirement?
So for-profit providers, no, there is no audit requirement. You're fine from that. Not-for-profits, on the other hand, have to go through a single audit determination. So basically, they would have to look at what other federal funding they may have. And based on all the federal funding, if they're above 750,000, including the provider relief funds, that would trigger a single audit or audit under uniform guidance. On the other hand, some states have different rules where you may not be above that threshold of a 750,000. But for instance, in New Jersey, if you're above 100,000 and you're a not-for-profit, they then require you to undergo what's called a yellow book audit or an audit under government auditing standards, which is much less in scope than a uniform guidance audit, but that would be required. So there is some additional steps that not-for-profits have to go through.
Okay, and if you do have that nonprofit situation, are we adding the PPP funds into that calculation of the 750?
No, so the PPP funds are not considered they're not considered a grant for purposes of the CFA, so that would not be included, whether it's a for-profit or a not-for-profit.
Okay, terrific. Now, Debbie, if we've applied for some additional assistance, such as from FEMA, but we haven't received those dollars, when we're doing this reporting, do we include those dollars as some of that assistance you mentioned earlier?
So when you look at the FAQs, they're very clear to state that those dollars would not be included if they have not yet been received. So no, we don't have to include them. And one other thing I just want to just touch on quickly is every time, just for the process of the reporting portal, just be aware that just like when you log into other portals, every time you log in, you are also going to receive a security code to continue. And in addition, it is going to, as a security measure, look to see your email address. Is that with the person who set it up? So just make certain that when you are logging in, it is going to reference whoever initially, when you registered, whatever email address was provided, because otherwise it might tend to lock you out of it. So like I said, if you have a reporting period that ended and your due date is September 30th of this year, I would definitely encourage you to log on today, start going through it, just get yourself familiar with it, verify the data that's in there. The information that's populated is that that agrees to your W-9. So you just want to make sure that all of that is complete so that when you are ready to provide more of the details, you know that you could continue in the process.
And Debbie, just to continue on with that a moment, we have a question whether or not, if somebody received funding in the second period where the reporting is not due yet, is any information populated in the HHS, or do we have to wait before we can go in and do anything on our account?
Well, they say that you cannot early report, right? So right now, what I take from that is they're only focused on the first reporting period through September 30th. But once again, if you've already registered and you have the ability to go in, I would at least look and see if, besides your basic data, is any of that information populated. But it appears to me that they're doing 1 quarter at a time, because it states numerous times you cannot early report, nor can you report it all in 1 quarter. Just to have it completed, you have to follow what they've provided as the due dates. But then also, once again, there is no extension on that due date. You have to have this completed, because we didn't have enough time today to go through it all. But then at the end, once you get past all the metrics that need to be provided, you then will have a summary page that they recommend that you print, and you have the opportunity to review that summary page. But once you submit the application, there's no going back. It's not like you could go back in, make a change. It's considered submitted and completed. So you really want to make sure that you take the time, review the information that's there, feel comfortable, with all that you've provided, and then, make sure to submit it timely.
Okay, well, great. We want to thank everybody for attending the webinar this morning. I believe we covered all the questions, but if not, you see everybody's email addresses here. As mentioned, we're going to be emailing you a link with all kinds of good things. So we hope everybody has a great weekend, got some really great content from our terrific speakers today, and hope everybody has a great day.